So good day traders, and welcome to a brand new video. In today's video we're going to be looking at liquidity in forex. Okay, so today we're going to be looking at what is liquidity. Does liquidity move the market? What zones are likely to be liquidated in forex market? Can I trade using only liquidity in the forex market? The smart money concept means you are going to never lose a trade again, and then we're going to summarize the whole thing. Okay, so we're going to jump straight into it. Now you're going to discover a lot of traders trying to kind of fix trading to be this kind of simple thing that you're just gonna see an equal low, a grab of liquidity and going higher. And in some cases, some traders just be like, oh, since this is an equal high, there should be dollars resting above here, and then market should reverse totally and start moving in the opposite direction. Okay, and this is not the case 90% of the time. So you need to have a strategy that's actually going to incorporate liquidity in it, such as supply and demand. If you've not watched supply and demand, go and watch my previous video where I talk about supply and demand and break it in depthly. Okay, so this is basically a Dow theory structure. You can see the higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So basically the only difference you can see here is an equal low. This double bottom here is an equal low, and then the market manipulated this equal low while grabbing liquidity and tapping into this what supply and demand zone down here, and then what rallying higher. I'm going to show you an example of this on the real chart, and then the opposite is the case in sell positions. Okay, so you can basically, okay, let me scroll to that side. You can basically see the market has been trending lower and lower and lower and lower, so just giving us perfect lower highs and lower lows. Now you can basically see that this supply zone here, before it got tapped in, there was a little bit of manipulation. The market played around, and a lot of people would have been looking to sell here, and then what market manipulated them out. Okay, so going back to I just wanted to overview this a little before we go back to our main concept. Now going back to what we are looking at, we're looking at what is liquidity. Now basically, my own understanding, there's what we call composite man in the forex market. This is a belief that there is a higher operator. There are a lot of firms and people who have a lot of money who actually try to manipulate the market before market goes into the normal trend which the market normally is in. Okay, so sometimes you might see market giving perfect delivery. This is why I don't believe in perfect higher highs and higher lows. I'm going to show you examples in the chart, and then you see this trend line. A lot of people are going to be trading the trend line, and then you see the market dipping below this trend line and before manipulating and going higher and higher and higher, and you just keep on wondering to yourself what is going on in this market. And then a lot of traders are being stopped out. A lot of people are being a lot of people are stopped out. Okay, so manipulation and liquidity is like going side by side. Due to the manipulation is caused by areas which are filled with liquidity, and I'm going to be showing you in the chart immediately. So without further ado, we jump into the charts. Now I'm looking at UJ here. This is USD JPY, and since UJ tapped into this demand zone, so this zone here, gray zone, demand zone. If you don't know what demand zone is, go to the my previous tutorial. I'm not going to oversize on that. Now if you go to the 1 hour, you're going to see the demand zone I marked out. So this zone here was the demand zone I marked out. Don't worry too much about it dipping below. Okay, don't worry too much about that. That's called absorption, and I'm going to be showing you, making a video on absorption so you don't get yourself confused. So jumping back to the 5 minutes, since our zone got tapped in, we've been looking at bullish price action, bullish price action ever since our zone got tapped in like this way. Okay, so since here we've been seeing bullish price action. Now from here, no doubt I would have been looking for a buy right here. After all these breaks, we would have been looking for buys. So our strategy actually allows us to manage trades. So even if we get liquidated, it doesn't really matter because we already made our profit, and then we look for more setups and we understand that there is liquidity in the market. So you don't just go ahead looking for every single liquidity. Now let me give you an example of liquidity. Look at this perfect trend line. A lot of people are going to be like, oh, on the first, the second, and the third touch of this trend line, as it looks so beautiful and it's delivering so fine, go on the third touch of this trend line and buy it. And as you buy it, what do you see immediately? The price moves against you. Does this mean our bias has changed? No. You can clearly see the market continues rallying higher and higher and higher and higher and higher, and you don't get an entry. Okay, so in this bullish market, you can see numerous manipulations. Okay, I can keep drawing trend lines forever. Even support zones get manipulated if you trade support and resistance. I don't really know how to draw out support and resistance zones, but you can clearly see this is a trend line. The market is clearly bullish, and then you can see there was a first, second touch, third touch, which is making this trend line a very strong trend line. I can basically see there's a lot of liquidity on this zone, and manipulation, okay, grab of liquidity. So the liquidity is like the money placed in the forex market. So a lot of traders here, right here, will be taking their buy tool, looking to buy this zone here and trying to take it what the stop loss below this low. I can basically see what the market just did, took them out immediately, and then what, continue firing higher and higher. I can basically see why it happens. Okay, a lot of times where the market is just looking too perfect, okay, just going on too straight and too right. You could basically see, look at this, the most perfect trend line on earth. I can see what it tap, and if you see the next thing that's going to happen, a lot of people will be looking to, okay, like before, buy this trend line. Wow, low below here, maybe they got into a little bit of profit, small profits, but what happens at the end of the day, it goes fully against them, okay. And then what you can see is happening day in, day out, and then it keeps happening. Even if the market is bullish, you can basically see the market is doing some madness, going down, and then we are still looking for higher prices at the end of the day because we understand the perspective of the market. So that is basically telling us about liquidity, okay, where liquidity lies in the market, and how liquidity normally takes people out. And if you just get the understanding, you get the point, okay. So a lot of people are just going to be like, okay, I'm going to create a system where I'm going to be looking at these equal lows, just as I showed you in the example. There was an equal low here, price manipulated the equal lows, and then they will look for an entry based on a supply and demand. For example, look at this zone here below the equal lows, and then you buy the market right at this zone, and so on and so forth. But even if you want to do things like this, you have to have lower time frame confirmation, and then you get your trades such as this trade, no manipulation, and then the market goes on without giving you any craziness at the end of the day, okay. So that is liquidity. Does liquidity move the market? Yes, 100%. Okay, the market normally doesn't just go, and that's another concept I'm going to be touching on immediately. The market is not just going to give you perfect higher high, higher low, 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 higher high. It is never going to do that. Okay, the market moves somewhere like this. It just goes high, 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 but at the end of the day, what you're assured is that the next high is going to be run when the price is bullish. That's the most probable move, high. So even if you see this market doing this way, down, 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 you should still expect this, okay, even if it's showing you clearly that, oh, we might be going down. On the higher time frame, that is not the case, okay. So that is one thing that a lot of traders refuse to put in their perspective. They like to use RSI trend lines and support and resistance, since that don't no longer work in their own trading criteria. So liquidity moves the market. It literally moves the market. Now look at EU here. EU is currently in a downtrend, and if I go to a higher time frame, like 30 minutes time frame, you can see that clearly that EU has been dropping. EU, after tapping a higher time frame supply and demand zone, this is the supply and demand zone, okay. After tapping that supply and demand zone, EU has just been bearish. Now can you see something clearly in this zone right here? Look at this perfect trend line. Let me draw it. A lot of people will be looking to buy this. What happens? It goes down, and then a lot of people are now looking at, oh, it's bearish, oh, it's bearish, and then it goes up. They're like, oh, it's bullish, it's bullish. What does it happen? What happens next? It liquidates everyone. So the people that were looking to buy the trend line would have been trying to buy the trend line around this zone here, putting their stop loss below this place, and then at the end of the day, what happens? They get liquidated. The people that thought, oh, now it's going bearish, immediately after I broke here, and then they just try to sell it immediately without factoring in proper supply and demand, will also get liquidated. So once this market does this madness, taking out a lot of people out of the market, what happens next? It gives the true move, which is what's going down impulsively, so taking a lot of people out and stuff like that. So even before EU tapped into this demand zone, into the supply zone up here, you can clearly see that EU has been playing around for some weeks. I believe it should be up to weeks here. For some weeks, EU has just been playing around in the middle, not telling us, oh, am I going up, am I going down, just clearly liquidating a lot of people. You can see trend line. You can see, oh shit, it's raining now, but hopefully you can still hear me. You can see this trend line, it gets liquidated down. You can see another clear trend line, it still gets liquidated downwards, okay. So you can clearly see how that is happening in the market, and then the market is clearly giving us liquidations, and market is moving. So once the market sees that a lot of people are now looking at this zone here as a kind of restriction, the market does what? Goes above it and then starts going lower after taking out a lot of people looking to sell maybe this resistance or this trend line. Okay, look at this trend line, perfect little trend line, perfect downtrend line. See, 1-2 touch, trying to sell it this way. What does the market do to you? Liquidated. Okay, so as a smart money trader, it doesn't mean you're not going to be liquidated. You're going to be liquidated, but not as often as a lot of traders are going to be looking at it. Okay, so the next point on our agenda is what zones are likely to be liquidated. Now, just as I explained, you don't just go start looking for equal highs and just be like, market is going to liquidate this high, because sometimes if the equal high is in a very downtrend, you can see equal highs like this and market will still continue trending lower. It won't just come up and just liquidate it, okay? Because the predominant move of the market is what? Bearish. The market has been bearish, the market will be bearish, and we are happier to get it right 7 times, okay? You get 1, 2, 3, 4, 5, 6, 7 times than to start looking for when this price will go higher, because at the end of the day you will take how many losses? 1 loss, demand failed. 2 loss, demand failed. 3 loss, demand failed. 4 loss, demand failed. 5 loss, demand failed, and so on. So we rather just stick to the proper bias that the market is giving us at the moment than predict reversal. So if it's a bullish market, you look for more demand, okay? So the liquidation you should be looking for is the liquidation of the next high. You expect this point to be what? Run by the market as a form of grabbing of what? Liquidity. And once this happens, and even if the market starts playing around, not giving any proper presentation, you should expect the next high to still be around, to be this next high. So you don't just look at random equal lows here, equal lows wherever, and say, okay, the market is immediately going to reverse to those zones. Okay, the rain is falling. Hopefully, I just hope this video comes out right, because rain is heavily falling here. Okay, so the zones are likely to be liquidated as those zones that are what? In line with the structure, the Dow theory. So if you're having lower highs and lower low, once this low forms and it starts going higher, you should expect the next point to be around to be this zone right here. So you should expect price to come lower and lower, and they what? Liquidate this zone right here. Okay, so as a side point, I'm really distracted by the rain, but hopefully I'll just post this video. I really need to get a video up, whatever, man. Can I trade only liquidity? No, you have to couple liquidity with SWOT structure. You don't just look at any random supply, any random equal highs and then expect liquidation. It should be in point with the current trend on the lower time frame or on the higher time frame before you start looking for entries on even lower time frames. Okay, does smart money concept mean you never lose a trade again? No. Smart money concepts, from my own perspective, if you are a real smart money trader, your win rate is not really going to be that high. I mean, most of them maybe 50%, the highest you would see, 30% and even up to 20% win rate. But at the end of the day, you are looking for higher risk to reward. So your risk to reward is what's going to be higher than the usual trader. So no, you take a lot of losses, okay? And sometimes you might count break-even trades as losses because of spreads and so on, due to the playing around with lower time frames. Simple, you can fix that by trading on what? The higher time frames. Okay, so hopefully this video was educative. I believe I touched on a lot of things, and then you know why the market is moving the way it's moving. Don't overcomplicate things. Keep it simple, because if you just keep complicating things, you will never learn anything in this market. You just believe that everything is hard, and you will not really make a genuine shift into a single belief system of profitability in the market. So go back to your charts, start marking out supply zones, watch what price does in these supply zones on lower time frames, and then just play around with what the chart is doing, mark out zones, watch the charts, come back to them after months or weeks or days or hours, and see what the chart is doing at those particular zones. Okay, so beautiful. I'm yet to make a video showing in depth of my strategy. Okay, so if you really want to learn more about this, you can check my Telegram channel. It's totally free. I'm going to be posting charts very soon on there, so you can easily be able to watch the way my weeks go and how we trade in Victorfx. So once again, we are sniper traders. We like catching a lot of high RR trades, and that's really good. Okay, so if you have any question, leave it in the comment section. I've ranted for too long. If you are here, you're the real OG. Okay, thanks for watching, and